All right, what's up, everybody? In today's video, we're going to cover a lot. All right, now we're going to briefly talk about the S&P 500. We're pulling back to our 200-day moving average here, but I know a lot of people are here for TLT. We'll talk about why I closed the remaining leftover TLT contracts that I had and what I'm looking for next as the next entry. We'll also talk about what the entry was that I was looking at, how you guys can spot those entries, and how to spot the next sell-off in TLT if we are to experience a sell-off. All right. We're also going to take a look at a lot of intermarket things and just really break down and try to get some further context for where TLT could be moving. The bonds and Japanese yen move together. Okay, they trade very, very similarly as in this chart. We'll break that down further. And I know tariffs are a really big thing right now. All right, when you look at the percentage of S&P 500 citing tariffs, it's hitting a 10-year high. Okay, it's so tariffs are a very big deal right now. And you can take a look at the percentage of S&P 500 citing tariffs. We'll break this down further, but it's just very, very large, right? We're seeing a lot of companies, speaking on and discussing tariffs in their earnings reports. But commodities, right, are what I'm looking at right now. All right, we'll talk about the relationship and also with inflation expectations. If we see these break down, that's going to be very bullish for TLT. Okay, TLT has a long track record, right? This is a max time frame, monthly time frame chart right here between agriculture and TLT. And we see they have a very clear inverse relationship, right? Even when you zoom into a shorter time period, such as a 2-year daily time frame, we see that that inverse relationship is still intact. And when we dive deeper into agriculture, what do we see? All right, we see a typo right there. Yes, I know. Okay, forgive me, I'm human. But we've bounced off of this trend line 3 times and are now retesting a key zone. So if this is going to continue riding the support, or if this rejects this supply zone here and breaks this trend line, we'll break down what that's going to mean for the bond market. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through that disclaimer. And I also started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance and trading related content. And I also sprinkle in free trade ideas in there as well. There's a website associated with it, so you can go back, read some of those previous trade ideas, check some of those things out, and see if it's something you want to sign up for. Now, if you want more and you want to gain access to our private trading group, use promo code Powell. That would get you guys 50% off of your first 2 months, which is a really nice discount. And inside of there, you're going to get 20 plus swing trade ideas every week, custom scripts and indicators, exclusive chart layouts, exclusive intel, and much, much more. And that's where you saw, that's where I made my post of whenever I was, buying into some more TLT once we got the breakout that I was looking for. Now, briefly, we're going to talk about the S&P 500. We've experienced a pretty significant pullback so far, and we are bouncing off of a retest zone, right? So we've got this Fibonacci extension level here right around 561.50, and we had a little bit of some overhead supply above there, right? I like to use these for targets, when trading stocks. We had a beautiful base right here, base formation, and we're looking to trade this base breakout. We come up towards that Fibonacci target, just barely overshoot it a little bit and create some overhead supply. And then we revisit that overhead supply here. We sell off again. And now the question is, can that previous overhead supply from here and here become new demand and new support for the market? We've already gotten an initial bounce off of there. So it seems to be the short-term answer is yes, right? But the bigger question is, hey, do we get back down below that 200-day moving average and do we break through there, right? We've got 560 to 565 is roughly that zone. Okay, if you just want to give it some whole round numbers there, that's the zone that I'm watching. And, a month, 2 months, 3 months from now, where we're trading at in terms of that level is going to give me a lot of insight into the market. Are we trading above there, right? Are we trading well above there, making new all-time highs? Or are we trading below there? Are we still consolidating at that level, at that zone? Or are we trading well below that zone? That's a very key zone for me personally that I'm watching is that 560 to 565 area. Now, TLT came through, hit our first target. Okay, so we were looking to trade this breakout here. And this was the post in the Discord at 9:30 right in the morning. All right, looking for initial push up to the anchored VWAP /38.2 percent Fibonacci level, right? And that's exactly where we came up to, right? We have the breakout here of our long-term downtrend line. We come up towards that, and this purple line is our anchored VWAP to the highs, right? And this is very important. An anchored VWAP is simply the volume weighted average price anchored to a specific time, right? So some people like to anchor them to the beginning of the week, the beginning of the month, the beginning of the year. I like to find very important pivot highs and pivot lows. And, what better place than where I have my, the top of my Fibonacci's right here. So from there, if you're trading above an anchored VWAP, it means that the average buyer is in profit, aka bulls are in control. And if you're trading below an anchored VWAP, it means that bears are in control. And we've had false breakouts several times from this anchored VWAP, right? False breakout up here, we're trading above it, weren't able to maintain above there, come back down below. Same thing over here, come up above it, weren't able to hold that, trade down below, sell off continues. And most recently, the reason that this was our target was because not only did it align with the Fibonacci level, but it also aligned very properly with the anchored VWAP. Okay. And this was a very logical place to take some profits at if you're in a trade, right? Which is what I did, right? We did go a little bit higher, but once again, we have failed to hold above this anchored VWAP. So what I'm looking for now is going to be an inverse head and shoulders setup, right? I want to take longs back above 91.29, okay, and our anchored VWAP here. If we can start trading above that, I want to be looking at longs again, and I'm going to be targeting the next Fibonacci level above, right around 95. Now, I may come in here and draw a little supply zone, and we may target the bottom of the supply zone or the top. I don't know. We're not in that situation yet at the moment. But there is a potential chart pattern to develop here, right? And that's going to be the inverse head and shoulders. Okay. We've got a left shoulder right here, right? We've got our head. And we've pulled back right around to those same support levels, right? So right around 89, I would call it, which is also going to be our anchored VWAP from the lows. So we have the anchored VWAP from the lows. So we can see from the lows, bulls are in control of price. But from the highs, bears are still in control of price. So we're pinching in between these VWAPs right now at the moment, squeezing in between those. And I would anticipate that to continue. I would anticipate it to be a little bit sloppy between 91.35 and 89. Okay. And we may not get clear direction. But upon that consolidation, that will build out a right shoulder for us on an inverse head and shoulders. And then we can look to potentially take some type of trade like this, right? And ultimately, the neckline could be pretty sloppy here, right? You could draw some type of neckline, maybe a little bit like this. Okay. It just depends. You could draw something like that. Or if you just want to draw this zone here as your neckline, something like this, where, this could be the neckline of your inverse head and shoulders, right? And so that's why I'm targeting, on a successful breakout and reclaim of this and, breakout of the anchored VWAP from the highs right around, just above a 100. I'll be looking to take some longs back up here towards that 95 area here because again, that could be our neckline for this inverse head and shoulders. There could be some resistance here. A 62% retracement is a very large move and significant move. The more you're trading above it, the odds increase greatly of a 100% retracement. And below there, the odds of chop or continuation, to the downside are much greater. So, right now, I don't think that at this specific moment that there's a very actionable swing trade idea or anything like that. This is a good time to sit, watch, monitor, the things that I'm telling you about right now. Now, there is a big warning sign, okay? And that's going to be the MACD on the daily time frame, okay? The MACD has been a fairly reliable trading indicator, buy sell indicator for, about the past 2, 3 years, really, with TLT. Right. When you get a bearish crossover, that typically leads to continued selling. Right. We take a look at the last bearish crossover we had up here. It also coincided with a false breakout above the anchored VWAP. And look how much TLT sold off. That was a very, very dramatic sell off. What do we have right now? Well, the bears that took this short on the bearish MACD crossover after the failed breakout of the anchored VWAP, they have the exact same setup right now. Failed breakout of the anchored VWAP, and the MACD is potentially on the verge of crossing over to the downside. So that's a big risk. That's why I think it's a good time to sit on hands, let things develop a little bit, and see where things go from there. Okay. Here's your bullish crossover right here, bullish crossover on the gap up, and you can see TLT had a significant rally there as well. The MACD has been and continues to be a good buy sell indicator. And it's something that I'm going to be watching very closely to see if this, crosses over to the downside and we continue to see weakness in the bond market, that weakness could persist. All right. So that's definitely a risk. Now, tariffs are a big deal, and a lot of people think that tariffs are going to be having a major impact on inflation. We see the number of S&P 500 companies citing tariffs on their earnings over the past 10 years is at new highs, right? We have not seen this many mentions of tariffs, in 10 years. And the percent of the S&P 500 companies citing tariffs, you look at materials, 82%, industrials, 71%. So you think of that, like 70, 80% of the companies within those two sectors right there are citing tariffs and basically expressing concern over these tariffs. You've also got consumer discretionary almost at 70% at 68, consumer staples at 64%, almost all across the board, except in utilities, energy, financials, and communication services, do you see tariffs below 50%? So, everyone in the media is talking about them, and the companies themselves are actually talking about them too in their earnings report. So it's a very big topic. For bond investors or for bond traders, they mostly want to know, is it going to have a big impact on inflation, right? And so one way that we can try to figure that out, because we can't really tell the future, is we can look at what the market's telling us. Okay, commodities, think of commodities, right? What are they? If commodity prices are going up, well, then that's typically inflationary because the prices of things are getting more expensive. The prices are going up, right? And then we have inflation expectations here on the bottom. What I'm looking for a bullish environment for TLT. So we already talked about the conditions on the technical analysis standpoint for the TLT chart specifically that I'm looking for. And let's say we get some of those, right? Let's say we develop that right shoulder and we reclaim that anchor VWAP. What I want to see happening is I want to see this commodities index right here breaking down, right? I want to see this breaking this support, right? We had old resistance, new support, new support, new support. It's tested this area here a lot. If you wanted to, you could draw a small top here, right? If we were to do something like that and come in here and draw a small top, what would that top lead to? Well, it would lead to further downside, right? That's going to be something that is a more bullish environment for TLT potentially, because inflation risks are going to be lower, right? If commodity prices are going lower, that's just a little bit of common sense, right? It doesn't necessarily have to correlate one to one, but when you just think about the concept and understand the concept and take into fact what I was mentioning of, all right, well, if I do get a buy signal on it, what are some of the other things that I want to look for confirmation from the market, right? And if the market has DBC commodities breaking down, well, then that trade will feel perhaps a little bit better and you can have a little bit more confidence about that. Also, inflation expectations, right? If this can turn into a top, if this can turn into a top here, and we end up seeing, basically a false breakout in inflation expectations, and this continues to drop lower, well, then the market's going to tell you that it's less and less worried about inflation, and that is more dovish for the Fed, right? For the Fed stance, and potentially even the bond market, and you could start to see rates drop and bonds continue to rise, as they've done here recently. So these are two charts that I'm watching very closely right now, to monitor. We've also got US 30-year bond futures and the Japanese yen. Look at the yen. The yen hasn't really broken out yet. Okay. There was that whole, yen carry trade, implosion that they talked about. But if this can break out here, right? And let's say that this ends up being a bottom, right? In the Japanese yen. And we have a nice base here, right? We're putting in, a low, a higher low potentially. And if this can break out here, we see that, bonds and the yen typically move together. And this could be a breakout waiting to happen in the bond market as well. So this is just another thing that I'm monitoring here, where it's, you ask yourself some questions. Okay, hey, I just took a long on TLT, perhaps what do I want to see, right? What's going to give me further confidence? This breakout in the Japanese yen, right? This base breakout here would have me feeling more confident about that trade. All right. And sticking on commodities, right? When you take a look at agriculture, right? So a specific, piece of commodities, they have a very strong inverse relationship with the bond market. Okay. And in terms of just thinking about inflation and things like that, if the price of things are going higher, then generally inflation could be going higher or inflation risks could be going higher. It's not something you need to overcomplicate. The chart really tells the story for you, right? And this is a very long-term chart. These are, a monthly time frame, and we can see the long-term trend as DBA is going down, bonds are going up, right? And as bonds are going down, DBA is going up. So we see that that relationship is true over the long term. When you look at the short term, it's even more true. This is over the past 2 years, basically, we have right here, maybe a year and a half. We see DBA going down, we see bonds going up. We see bonds going down, DBA going up. We see, agriculture going down, we see TLT going up, right? And most recently, agriculture has been in a very strong uptrend, and the bond market has been in a very strong downtrend that, as I mentioned, we recently just broke out of, right? So let's zoom into the agriculture, right? That trend line that we talked about that we broke on TLT, that where we took an initial trade up towards that Fibonacci level. If this breaks down, that's going to give us a little bit more confidence, okay, in perhaps taking some new longs on TLT. For now, this uptrend is very strong and still intact, right? We bounced off of it here, here, and yet again, another bounce. But we've got a key level that we're coming up on now and a little bit of some potential overhead supply, right? If this rejects this area and breaks down from here, given the inverse relationship that TLT has with, DBA, it's very possible that TLT could continue to rise. Now, as long as we're holding this trend line and this is moving upwards, that's going to be downward pressure potentially on the TLT. Okay. So you can use this stuff that you're learning in today's video to, expand your skill set, right? And really just learn how you can look at other things in the market, and how you can use technical analysis on other charts and other areas, do intermarket analysis, do intra-market analysis, different things like that. To really help give yourself an edge, right? And develop that edge because as a trader, you've got to have an edge somewhere. And so, as a TLT trader over the past 3 years, that's what my edge has been, right? Is this process right here, right? Is going through looking at the intermarket, intramarket relationships, okay? Doing technical analysis, using the daily MACD crossovers, whether bullish or bearish, and combining all of that together, to really help give myself an edge in trading the bond market. So hopefully you guys enjoyed the video. That's why I shared all this information with you. I think it's valuable. I don't think enough people are showing you these things. I think that most videos on YouTube, people are just kind of just telling you what they believe and just hoping that you believe it too and like and subscribe without really trying to give some good data sets and things behind it. So that was the purpose of today's video. If you enjoyed it, you're really going to enjoy becoming a member of our private trading group. So use that promo code POWEL to get yourself 50% off your first 2 months. That's a very nice discount right there. All right. We talk about how there's custom scripts and indicators inside of there that you guys get. And this is one of them, right? This is called the Zone Finder. I actually debuted the very first trade idea from the Zone Finder in the newsletter for completely free. And as a beginner, most people's questions are, how do I draw supply and demand zones? Well, there's a million ways you could do it, and you could watch countless, hours of free videos or read and study upon it. Or I created a script that does it for you, right? It charts the demand zone in green, it charts the supply zone in red, it does the hard work for you. And when you run the scan, you can run the scan for stocks that are currently trading in demand zones. And what that does is that gives you very favorable risk reward ratios, right? Where you look and oftentimes you have a 3-to-1, 4-to-1, 5-to-1 risk reward ratio that allows you to not be a perfect trader, right? You can lose a couple trades, right? With the 3-to-1 risk reward ratio, even if you lose two trades, but you win that third one, you still come out net profitable. Okay. And this one was just very, very clean, right? Develop your edge, right? Where, hey, we have demand zone here. We also made a higher low in our demand zone. We also have a bullish falling wedge pattern, right? You combine a lot of those things and you find an edge and you say, hey, I want to take this long. And that's why I put it in the newsletter for you guys completely free. That trade idea worked out very, very well in a very short period of time, being that this was a 1 hour chart time frame. All right, so inside of there, you're going to get 20 plus swing trade ideas every week, custom scripts and indicators, just like the one I just showed you guys, exclusive chart layouts, exclusive intel. And if you don't want to pay for anything, that's fine. I put out really good, valuable content on the newsletter I created called Investment Intelligence. In there, I give out free, valuable finance and trading related content, and I also try to sprinkle in free trade ideas for you guys too. Okay, so you can check out the website, go check that out, read some of the previous articles and posts that I've made in there, see if it's something that you guys want. And if it is, you can get those sent directly to your email inbox by signing up. Now, I've also been doing one-on-one sessions for the past few years, past 2, 3 years. If you're interested and you want to book a 30-minute or a 1 hour session, I'm letting people book that on my Ko-Fi page now. So you go to the commissions tab, and in there, you can book a 30-minute or you can book a 1 hour session directly, whether or not you want to go over day trading dynamics, swing trading strategies, or you just want to have an interactive Q&A with me. That is where you can book those sessions now, and put your request inside of there. They also have this cool buy a coffee button, basically a way to leave a tip or donation for all the free valuable content that I put out, such as these videos and such as the newsletter. Appreciate y'all watching, and I will see you in the next one. Don't forget to subscribe as well.